This is Eric Muather with Muather.com for the week of May the 21st, 2012. Let's take a look at the markets here. We see that on the options expiration week, third trading week of May, we see that the market in terms of the Nasdaq had a 5.3% drop, huge drop, the biggest drop for 2012. And one of the reasons why the market was slashing below that is we see that the market is now breaking below the breakout level here. We are below that level here, but on the positive front, we see that we might be finding or might try and find support on this former breakout level here. This was a former breakout level here, so we moved up, come back, and are bouncing off this level. So that's what might be the case. Problem is the market is now trading below the 10-week moving average and the 33-week moving average, which means that it could be a condition for a free fall, even though you can't expect the market to go down every day. Net, not a surprise what the market is doing here. We talked about the fact that the weekly charts had been relatively weak. The monthly charts are absolutely bearish. We have the MACD breaking down there. So the market going down, the biggest drop for the year, not a surprise. There have been a lot of sell signals across the board over the last couple of weeks. Now let's take a look at the Nasdaq again from a daily perspective. We see that this gap had not been filled. That gap had not been filled ever since it broke out. But we've come back over the last couple of days. We were trying to find support here, there, but we broke down. After we broke down, it's been a straight 3-day slide. Also happens to be a breakdown of this breakout level here. Now this was a roof going back to 2011. We broke out on a nice gap up move here, had a nice rally, but we ran into some resistance here. Some charts were giving us some sell signals, but net what we see here is now that the market is trading below the 50-day moving average, and the next stop surely has to be a test of this 200-day moving average. The market is definitely have to make contact with the 200-day moving average, and then we're going to decide whether we go from there. So huge down week, really no surprise. The market was going to be in trouble one way or the other, based on the fact that the weekly and the monthly charts have been terrible, look terrible. Now here's the Nasdaq 20-year monthly chart here, and what you see here is what I've been talking about over the last couple of weeks, and I know some of you are tired of seeing this, but on the monthly chart you have this 2000 high, 2007 high. Draw a straight line, you find that it gave you a sell signal for the highs of 2011, and this could be the highs. If that sell signal, again, this resistance on the monthly, big time monthly resistance, and I talked about the fact that we could have seen the highs for 2012. How low are we gonna go? I don't know, but not looking good on the big time, long-term monthly charts. What that suggests is that we might be seeing the market rally from day to day, but week to week, month to month, we are absolutely not gonna be seeing a lot of traction to the upside. Let's take a look at the Greek market here. This is a weekly chart, 2-year weekly, and this this index here being on the news here, we see that it broke to a fresh multi-year low right there. So not a good sign. It tells me that we probably over time gonna be seeing this thing crash to the downside. So we see that also the moving averages right there. The 10-week moving average is also making a fresh multi-year low. That suggests to me continued pressure to the downside. So that's the Greek market here. Take a look at Spain, again 2-year weekly. We see that Spain broke down April here, fresh multi-year lows, and we see that there's really nothing on the charts to me that tells me that we are ready to bounce. Remember, the only way we can bounce is first and foremost we have to recapture the area above the declining moving averages. So the moving averages are pointing lower. We haven't recaptured the area above that. So really we could rally day to day, but month to month even the Spanish index looks to be under considerable downside pressure. Let's take a look at some other markets here. Japan, just a couple of weeks ago we were trading at about 10,200, which was an area of resistance, coming back from the gap. And this gap, like I've been discussing, is from the tsunami. After the tsunami, we had this massive gap here, which has turned to be a upside resistance like it did here. And again, over the last couple, in March this year, that has been resistance. But trading at 10,200, and now as low as 8,800. That's almost a 15 to 17% drop on the Japanese market. Terrible. Also trading below the 200-day moving average, trading below the 50-day moving average. So, downside pressure, could bounce, but I don't see it. If you take a look at the Chinese market, what I wanted to share here is the weekly RSI, which you take the highs of 2009, highs of 2010, draw a straight line on the RSI, you'd find that it predicted that high, which is 2011 highs, and again predicted 2012 highs, and again predicted that high as this line, as we found resistance there. So even the Chinese market has been running into resistance, and we've been discussing this over the last couple of weeks, so no surprise that we are seeing downside pressure. The Korean market, if you remember, we talked about this head and shoulders formation here, left shoulder, head, right shoulder. That was beginning of last year, mid last year. We've been down ever since. Most recently there was a sell signal when we ran into resistance here, this line here. So there was topside resistance there. Not a surprise now that we see that 10-week moving average crossing over the 33-week moving average. The last time we had that sell signal was in July of last year, July of last year. We had this big drop. Again, we are seeing another bearish crossover between the 10-week moving average and the 33-week moving average. So even the Korean market really under stress, downside pressure. Don't see any life in it for now. Take a look at the London market here, the FTSE. Again, you see the last time we had a crossover between the 10-week moving average and the 33-week moving average was last year when we had this massive drop. We are seeing another fresh crossover between the 10-week moving average and the 33-week moving average, again indicating we might be seeing week to week, month to month downside pressure. Now we could find support here, right there, could find support. Maybe we do, maybe we don't, but we need to see it first before we can assume it's gonna hold. Right now this could be a line of defense here, but needless to say, it's not looking good. Take a look at the FTSE from a monthly chart. What I wanted to show you is that if you take 2007 highs, connect those to 2011 highs, draw a straight line, we ran into resistance there, and we've been down since. For the month we're about 8% down, but really, and I've talked about this, probably you guys are tired of hearing it, but the monthly charts were showing resistance here, and I was really skeptical about any rally in the market because we were running into this RSI resistance, and that has been a telegraphing downside pressure over the last 2-3 months. So not a surprise that we are seeing this massive drop in the world markets. Take a look at Hong Kong. Again, bearish development here. We have the cross between the 10-week and the 33-week moving average, which telegraphed this massive drop here, and we are seeing another crossover, fresh crossover between the 10-week moving average and the 33-week moving average. Might be predicting another massive drop in the coming months, not day to day, but month to month. Not looking good. Let's take a look at the Brazilian market. Again, 10-week moving average crossover last year, and now we have a fresh 10-week moving average crossover right now. So that tells me to expect day-to-day possibility of a rally, but net not looking good. Let's come back to the US markets here, and we see that the S&P 500 also broke down. This was where it was trying to find some support on this line here. This was resistance on the way up. Once we broke out here, we had a nice run, but we've come back, bounced off this level once, tried to bounce here, tried as much as we could, but we gave up the ghost. Now we've had 4 or 5 straight days to the downside. Definitely gonna have to contend with this 200-day moving average. We're gonna have to make contact with that. All right, so that's the case there. S&P 500 not looking good. Take a look at the S&P 500 again from a monthly chart. Again, same scenario. Talked about this over the last 2, 3, 4 months. The fact that the market was trying to rally, but there was a problem with the RSI, and the sell signal in the RSI comes from this RSI top line here. This line was telegraphing possibility of resistance, and we did see resistance, and the fact that the market is down about 7% for the month is no surprise. We might, and I suspect we've seen the highs for 2012. Take a look at the Dow. Now you see the Dow has definitely broken down below a huge massive breakdown below this breakout point there. Let me see if I can change the color here so we can. This was a breakout level there. We are below that level, so the breakout has failed, and we are also trading below the 10-week moving average and the 33-week moving average. So not a good sign. Month to month, I think the market's going to be under trouble. Also notice that we are down for the week, biggest weekly drop for the week, because we are slashing below 0 on the MACD. Whenever you slash below 0 on the MACD on this setting, you get a big pullback in the market. Let's take a look at Dow monthly again. Market was trying to rally here, but if you take a look at the monthly charts, I've talked about this over the last 3, 4, 5 months. There was going to be resistance there. We hit that resistance, and so that prediction was correct. No surprise that the Dow is down about 6-7% this month. Take a look at the XLF. Now I've talked about this chart for a while here, and XLF down about 10% for the month of May so far, and really very easy call because you see that we've been finding resistance since 2007. We've been finding resistance there. Remember, 2007 is right there, late 2007. Once we drop below that line, this became an area of monthly RSI resistance. We failed once there, which was highs of 2011. We are failing again here, which I suspect we've seen the highs for 2012. The only way that can change, is if this market breaks out. That's the only way. But for now, the fact that we are finding it difficult to stay above this critical sell point, critical because this is where we began the crash of 2008, 2009. The sell-off started right there, and we failed once, which was the highs of 2011, and this is confirmation that the highs of 2012 are in. So take a look at the real estate market. Now remember, this was one of the markets I was trying to push to new highs. Problem was we were making fresh daily closing highs, but the technical picture was not improving. So we had negative divergence. No surprise that now we are breaking down. Also happened to break down this trend, the lows of 2011. We had been holding steady on this trend line, but we broke down over the last 2 days right there. Also happened to be break down below the 50-day moving average right there. So we have a break of this trend line and break below the 50-day moving average. So net, even the real estate market is showing considerable sell signal. Also notice that we were trying to push breakout here over the last, this is a monthly chart, trying to break out there. Problem was, and I was trying to show this to you guys over the last couple of weeks, is that we were gonna run into resistance, if you connect the highs of 2007 and the highs of 2011, draw a straight line, we perfectly, I mean, you cannot make this up. We hit that level on the money right there, and we've since pulled back. Not a surprise. In fact, that tells me to expect even lower prices. Take a look at the crude oil index here, light crude oil, and you see that this line here, which connects the lows of 2009, this line here has been telling us a lot of stuff. We broke down there and we've been trying to hold above this line, failed there, came back, tried to move above that line there. So this line has been a diagonal slope resistance. So once we had this confirmed resistance here, if you remember, go back to the videos of around March, I kept saying that if we can't hold that level, we're going to be moving low, and that seems to be the case. Also happens to see that now we are seeing the possibility of a bearish crossover between the 10-week moving average and the 33-week moving average, and my net analysis is downside pressure unless we can find support now on this line here. So there is a possibility of support here short term, but not looking good month to month. If you take a look at FAZ, which is the 3 times bearish financial ETF, what I wanted to show you here is the RSI telling us some kind of story, a change in sentiment, because this instrument has not, since August of 2011, has not been able to move above this level here, the RSI. We've been finding it difficult. There was resistance here, resistance here, resistance here, and resistance here sometime in April. But now we see that we broke out. This is a fresh break right here. We are trading, we haven't seen these levels in the RSI going back since, again, August of 2011. So we've stayed in this area for a couple, almost 1 year. But now we are trading in a totally different zone, and that is probably the sign of a change in market sentiment. We are trading in this area, not seen since market was in trouble here. So that tells me not to be surprised if we see the market to be continuing pushing lower. If you take a look at now the USO, what I wanted to point out here is the fact that we had a bearish crossover. 2010 we saw a big drop, bearish crossover between the moving averages. 2011 we saw a big drop, and now a fresh crossover between the moving averages. We might continue seeing bearish price action week to week, month to month, not necessarily day to day. Take a look at the OIH. You see that, take the lows of 2009, 2008 and draw a straight line. You see that this line has been support here. We tried to hold here, but now we've broken down. So that tells me we could be pushing lower. Also very important to note that now the 10-week moving average right there is about to move to a multi-month low. So the 10-week moving average is about to break down even further. Suggests to me downside pressure is still the play there. Let's take a look at the SMH, and this is all-time data going back to 1999, and this is a semiconductor ETF. What I wanted to share with you here is take a look at the monthly RSI. This is 2000 tech bubble highs. This is a double top from 2011. Now connect those two levels. You see that we hit that 2 months ago, hit that high right there, and now we are finding it, we are moving lower. Not a surprise, because this here, like I've been talking about over the last couple of weeks and months, was gonna be a trouble spot, and that was your sell signal in the market. No surprise that we are seeing almost an 11% drop so far in the month of May. If you take a look at it from a weekly chart, you see that now this breakout has failed. That area seems to be now in hindsight a trap. Seemed like a breakout, but it was a trap. And you could have seen it was a trap because if you take a look at the RSI on a weekly chart, take the lows of 2008, lows of summer 2010, right there, draw a straight line, you find that this straight line has become resistance right there. So that was telling me that we could see the prices moving lower. So not a surprise that we are finding it weekly and monthly charts giving us sell signals. Now this is gold, and gold has been, now remember, gold broke out. The last time gold had a fierce rally was when it broke out above 15,056, broke out and had a strong move. Now since then, this level here has been support. In October 2011, support, December 2011, and now seems to be support as of this week. So maybe this is where as low as gold is gonna go. Now, so what we can take out, the takeaway here is, as long as gold stays above this level here, we can say gold is still probably gonna be on a possibility of a move higher. But if we come back and break that level, then it's gonna be free fall. Right now we are trying to hold that level with this positive close for the week after a big drop early in the week. That tells me that this support is still holding. Problem here for me is the fact that I see this crossover between the 10-week moving average and the 33-week moving average. That being the case, maybe we move lower. But support is holding for now, so let's just say that gold is in no man's land. Could rally from here, could break down, but we have our line on the sand, which is at about 15,056. I guess that's that for now. I'm gonna leave you with that. Let's see whether this market stays on a bounce level. But as far as the general market is concerned, pretty much under considerable downside pressure for the foreseeable future. Day to day we might rally, month to month market's gonna be into trouble. Eric Muather with Muather.com. Good luck, peace, and blessings.